Alrighty, daily trading recap for Friday, the 20th of May, 2022. It's Saturday today, but still getting after it, connecting that chain, not breaking the chain, as that Jerry Seinfeld expression goes. Still getting after it and recapping what was, again, another same old day of doing the exact same thing, of just using these automated algorithmic future strategies, kind of staying away from equities for the meantime and finding our little niche and groove in it as we can. To Christ be the glory in all of it. I'll mention some dollar volume quick first before going over anything else. NASDAQ $290 billion volume on this day. NYSE $374 billion volume overall. OTC markets $1.9 billion volume on the day. Overall market dipping pretty hard, doing a quick little fake out, just a little reversal there. Dipping its little toe into bear market hardness, but then, of course, rebounding and ending up green on the day, intraday, actually, compared to previous trading day's close. So we'll see where the next few days of next week end up leading us into further 380 area testing on SPY here, or if we continue to trend in this 390 to 400 range, maybe potentially. It'll be interesting to see that way. But with this automated strategies, I continue to liken to this just style of trading, or this little groove that I found myself with this, I call it back testing, but this kind of data proven approach of using a short-term past, a little bit of a medium-term past, and a little bit of a longer-term past of anything and everything that the market has offered in the high volume, high volatility areas of 15 minutes after market open, 15 minutes before market close, session wide. If there's any key patterns or things that are just becoming apparent or blatant that I don't have to put any amount of thought or energy into of emotionally trading them, but can say, hey, the market has been doing X consistently this amount of times. And something that I've learned totally from the beginning stages of when I started doing this future strategy of it, the hit rate doesn't really necessarily matter. That's awesome and that's cool to think about, and being a part of that is awesome. Sometimes they just kind of show up and it just continually churns out this money. But at the end of the day, just like in all trading, one trade just can completely wipe you out of everything that you're doing. So keeping that factor at the foremost front of my mind as I do these strategies of, that hit rate is cool and great, but does it really create a profitable strategy over a long term of, say, 100 trades, of just kind of basing it off that of easy 100 round figure there. But yeah, finding a lot of success with the upward profit target strategy that I was doing with the session wide, and even the downward side profit strategy that was profit seeking target strategy that ended up happening later in the day in the actual market hours, which I feel is kind of the first time it's happened since I started doing this, a few weeks back now. And especially with the full ES contract size on that downward profit target, larger downward profit target strategy. That way. So exciting to see on both ends there. 930 strategy working out well for the little tiny scalps I'm taking on it. And these are what these are, right? I want to say that even with my bigger profit target seeking session wide strategies, like I can say, oh, I'm looking for more points, but in essence, it's still a scalp. I'm not making market moves. I'm not trading market moves. I'm just trading, hey, the market says it's doing this consistently or at a rate at which I can continually accumulate a profit from it. But at the same time, I'm not pushing buttons. I'm letting the algorithm do what it does and just setting the time frame parameters and letting it just absolutely run. And that's where I find a lot of success in just kind of taking myself out of the equation as much as possible, because I don't know if the stock market's going to continue to drop for the next 2 weeks. What if the market completely just turns right here and today was the bottom? The same thing with like the 2020 drop of what if, who was thinking that, oh my gosh, this day was going to be the exact bottom as it happened on a Monday, and then sure enough, that's the reversal, that if you bought on this day, you're going to experience whatever 3,000x returns and then sell it on this exact top day here. With the index trading, it's just shooting fish in a barrel, right? It's just so up in the air of times of so many different variables coming into try and affect these price action factors that way. So truthfully, as I'm kind of gleaning away from the just monotony and just weirdness that is the summer months of equity trading, I'm getting more into, hey, can we find some amount of approach that's playing out totally based off of consistent factors in the overall index of the market? That's not a chart-based pattern. It's not a technical analysis-based pattern. It's not anything to do with trying to play the same metrics as an equity per se. That's, I would say, more diluted with that human emotion factor versus this index trading that just kind of finds itself in that groove of, is there something that happens every single day. And that's the play that this is going after, of not trying to involve myself with any amount of discretionary trading in it, but yeah, just totally finding myself in this groove of not being so hard pressed on, I have to be trading it today and there has to be a pattern, but just overall saying, hey, is there any pattern based on these little parameters I said of, hey, we know the first 15 minutes of market open is usually pretty volatile, as well as the last 15 minutes of market open. Is there any types of patterns we can recognize in that of consistency that continues to produce itself, not based on any chart analysis or technical analysis that way, but just based on points. And futures opens the door for awesome opportunity and just P&L accumulation from that, based on the standard metrics of point is worth this much, and you can get different factors based on that. Just playing it on a points-based system there compared to options of the time decay and all the different Greeks and metrics going into that. But yeah, I'm said it before in past videos, but I'm certainly likening to it more and more as I've evolved my thinking on it, of just understanding what it is and how I approach it and how I like to play it that way. So extremely thankful for that and excited to see where it can continue to go for these summer months. If I continue to start playing more and more in equities, or just continue to kind of step away from those more and more, maybe get a little bit better perspective to potentially come back if opportunity starts slamming me in the face in the future. But thankful for each and every day, and I sincerely thank you guys for watching. That's all I had, and we will catch you guys on the next one.